The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to start the show with Sir Isaac Newton. I've posted into the Tiger TV today the picture of an ammonite, which is the oldest thing on our planet. It's 150, this one they believe is around 100 to 150 million years old. This particular piece of rock is about 3 feet by 3 feet, and it weighs about 80 pounds. And as you can see, those two beautiful spirals that are there, that's the ammonite, the seashell itself. What Sarah and I collect is we take the cutouts of those, and then what they do is they slice them in half to show the inner cycles that show all the little panels of where the expansions and contractions are. The reason why I'm bringing this up is the fact that this particular diagram, the actual mathematical diagram where the market expands out to 1.618, was the engraved on the oak headboard of Sir Isaac Newton's bed. And then if you ever read any of his writings, one of the things he mentions when he talks about this is that he believed that he really strongly believed in reincarnation, that what we learn in one life, it proceeds out to the next. Now that's way over this cowboy's head, but frankly that's what we're looking at here, and we'll see what's going on. But these are really beautiful things, and they have some really incredible cutouts of these, and they have really smaller ones made into necklace, because they come in all different sizes and stuff, and they polish them up, and they really are beautiful. That's what's being shown. The gem and jewelry show here in Tucson is about 35,000 dealers from all over the world, and part of the gem show is what they're looking at here. These types of ammonites and sapphire crystals and just everything under the sun that you can imagine. Quartz crystals. I mean, you wouldn't believe some of the things that they have here. They're really good. But then they have a lot of jewelry stuff too. This is where the people come to buy their jewelry for the hotels and the boutiques and the gift shops and the things at the airport and things you see on the street. There's just everything from anything from 10 cents up to $1 million or $2 million. They have diamonds that are even worth a lot more than that. Okay, we'll move on to the markets now. We're going to be down about 150 this morning, it looks like, after being up 400 on Friday. Folks, I'll tell you, just from looking at these charts, and you can go through them one by one if you like. That's what I try to do when I look at it each week, but there's a couple of them here, and these are all related. I don't think I've ever seen this many numbers coming together on some of these things like I have, except for maybe 2009, when we were March 2009, when we were making a bottom. I think we made some type of significant bottom here in stocks. I could be flat out wrong, but gosh, it really is. It's really amazing, these things that we've hit. We'll look at the banking index first, and as you can see, we hit the exact 1.618 retracement of this last move from September to up to October. That was also almost spot on to 1.27 from October of 2014. And if you want to see the importance of 1.618, just look to the top of the chart up on the left, and you'll see when the top was being made with that 3 drive to a top pattern, which is also the expanding triangle, you'll notice it was also making a 1.618 expansion. That's one of the reasons why I posted the Isaac Newton's, well, it's not Isaac Newton's, of course, but the Ammonites, because that's how, the markets work. They expand and contract. They expand and contract. That's all they're doing. And they expand out to the 1.618. Going past that, you've got numbers that just keep going on forever because it goes to infinity. But for trading purposes, the 1.618 is a really important spot. I want to tell you a story here because this is the radio show and we get to tell stories here. But back in 1973, 74, I met a gentleman. I didn't meet him. I actually talked to him on the phone a few times. He was from back east. He lived outside of New York. I think he lived in Queens, if I'm not mistaken. And his name was David Harrahus. And John Hill talked to him a few times too. But he sent me a couple of charts, and they didn't mean anything to me because this was the early 70s, and you couldn't tell me anything when you're making money. You just don't learn anything when you're making money. You learn when you're losing money. But he talked about this 1.618 ratio, which I knew because John had showed me this, using a proportional divider, and I'd read a little bit about Elliott. This was back in 1973. No, the answer is, am I becoming a bull? Absolutely not. This is we're in for hard times, but we'll see. We'll wait and see. Right now, I just think we're in a spot where we're going to be rallying for a bit, but we'll wait and see. Okay. Anyway, I had a couple phone calls with him, and he told me about a couple of calls. This was not S&P stuff. This was related to the Dow Jones because we didn't have the S&P 500 until 1982, and he made a couple of interesting calls on the gold market because we had just started trading gold, and he said once gold went above the 260 level that it was going to probably go to almost 1,000. One day I called him up, and his wife was rather distraught, and I asked her, where's Dave? And she said, well, he passed away. And I said, what happened? And she said, well, they tell me that he committed suicide. We found him hanging on a tree in the backyard. But she said that man, my husband, never committed suicide. She said, I can promise you that. She said he was very happy. We had everything we wanted. We were planning a trip. She said, there is absolutely no way, she said, but no one would investigate. And so I don't know, why that happened, but that's really crazy. Now, if you want to follow along that line, there's a movie, a little avant-garde movie by the Warshawski brothers called Pi, which is the circumference of a circle formula. And basically in that movie, this fellow is totally paranoid. He's a little bit on LSD, almost like that music that they were playing when we started the show. But what he talks about in this movie is becomes paranoid because he finds a secret for beating the stock market, and the major banks are trying to track him down. So you can rent that on Netflix, I believe. But the movie is called Pi, and it's about an hour and 20 minutes long, and it's in black and white. So don't expect too much, but it was very interesting. But it did win some awards at the Sundance Film Festival, I believe, back in the early 90s. So we'll see if that's it. Anyway, I don't think there's any secret, but we'll see. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back, folks, and I've had two other questions about why have I turned bullish, and I'm not turning bullish. I'm just saying that we're in a section here where we could have, a very good rally. That's, basically, what it looks like to me, and nothing more, nothing less. So I think that's what we really want to, focus on, is that we should get a rally, which we've been expecting since, around the 23rd when we had the full moon, and then on 25th we had the Mercury going into direct motion, and those are just smaller cycles. But so far, that's what's happened, and we want to see what's see if that continues, moving on, in that direction, and that's basically the bottom line. Longer term, folks, we're in big trouble. If you look at these long-term charts, it's really very, very scary, and so you want to be you want to respect that, because we've had a situation where we've had huge moves that have pretty much set the record books for January, and we want to respect that, because right now the market, the most bearish thing that could happen to the market now is for it to rally 2 weeks, which that's what we're expecting. And then, because then you'll get people back in bullish again, and then look out, it will start to, move to the downside. Let's take a look at what I think is focusing, what we're looking at this week here in the crude oil complex. One of the things that we mentioned a week or so ago, looking at this long-term weekly chart in the crude oil, you see we've come down and made a beautiful ABCD pattern. Then we had a nice little rally. It went from 26 up to 34. It rallied $8 a barrel, which isn't very much, but it was some type of a barrel. And what we're having now is a normal correction. If we look at what's going on with crude oil over just the last few days. And that's really what you're trying to do when you're trading these really active markets, is to see how they line up. And basically what they're doing is doing nothing more than these ABCD moves. If you'll notice here, since the first of the year, all crude oil did this past 3 weeks in the rally, the last 2 weeks of January, you'll notice all it did was make a perfect ABCD pattern exactly at the 61% retracement. And that came in at $36 a barrel. The high was $36.19. We're now trading sub $34 a barrel. I noticed today not today, but yesterday in Tucson, gas was approaching $1.50 a barrel in oil, and looks like we're going to be going lower. Oh, we got a call from California. Paul, are you there?
Yes, sir. How you doing, Larry? Good morning.
Very good. What can I do for you, my friend?
Hey, Larry, I'm a newsletter subscriber, and before I ask my question, I just wanted to say I've been learning a lot from not only the newsletter that comes out weekly, but especially the videos that you send out, because I knew nothing about Fibonacci, retracements, none of this stuff until I stumbled across TFNN. And the way that you break it down in a video newsletter update really helps me understand more about what's going on. So thank you for that service. I really appreciate it.
Well, thank you, Paul. What can I help you with today?
Now, on the newsletter, the Bradley model, I want to take a look at that. Do you see the rally kind of coming to an end during that February 8th period, or maybe extending a little bit longer?
Yes, it does. I'm going to post that into the room now. You'll be able to see that this is what the Bradley's been doing since last May. And remember, the high we topped on May the 19th, and that was an inversion in the Bradley at that time. That's when we had Mercury going retrograde, and also we had a new moon. But where we are now is, you see, we had that big spike down where we didn't take out the lows of August, and now we're rallying into the new moon of February 8th. And the reason why that's so important, Paul, is because we have a lot of transits or cycles that are coming due around that time, and that's also the time of the Chinese New Year and the new moon. So that's going to be really important to watch a week from today when we come in to see what's happened. It might happen on a Monday, could happen on a Friday, but we'll be watching it very, very closely. It wouldn't be unusual to have something really newsworthy around that time, because there's so much cycle work due. So that's what we're watching, is that February 8th time period.
Awesome. Hey, one other quick comment. I've been listening to your show a lot, and I've been doing some research on Martin Armstrong with his cycle work.
Sure.
Would there be any sort of way that you could possibly get him on the show? He has some very interesting things he's been talking about recently.
Yeah. Yes, I'll try to do that, but I have to tell you an interesting story about Martin Armstrong. I met him in 1988. My book, Astro Cycles, The Trader's Viewpoint, got a couple of awards that year because it was the first cycle book on astrology in a long time, and Commander David Williams, actually gave a promotion for it. He wrote one of the articles for it. Anyway, I was at a cycles meeting down in Orange County, and I was one of the presenters, and Martin Armstrong, of course, was one of the major presenters. I gave a 1-hour speech, he gave a 2-hour speech, but at the cocktail party, I was standing there visiting with my good friend Peter Leides and a couple other guys that I know, PQ Wall, and I forget, there were several of us there, and this lovely young lady came up, and she started talking, and she looked at me and she says, "What did you think of Martin Armstrong?" And I said, "Well, there's no question the guy's an absolute genius." And I said, "He really is brilliant." I said, "But frankly, I've never met anybody that is so stuck on himself and has such a high opinion of himself." And she says, "Yeah, I know." She said, "I'm engaged to him." And so I don't know if he'll remember that, but that was my only. I met him a little bit later, and I tried to tell him the story. He sort of laughed it off. But like Muhammad Ali says, when you can say it and it's true, you ain't bragging. And believe me, that guy is one smart. He's one smart cookie, Paul. There's no question about it. But I will try to get him on.
Yeah, I listened to an interview with him recently, and I thought it was fascinating. I would like to hear you guys talk, because he seems to think that the Dow could double starting sometime next year. So I don't know.
Well, that's certainly possible. Like Abraham Lincoln said, "I respect your opinion, however wrong it may be." We don't. That's way too out there. If it's going to double, it's going to give us some really good indications of it. That would be my opinion. So I think we just have to wait. All I know is that this low that we hit back here in late January is really a key low, because I have not seen that many 1.618 ratios hit all at the same time. And we saw it in the emerging markets. We saw it in the Chinese market. We saw it in two of them in the Hang Seng. We saw one in the Nikkei Dow. We saw it in the banking index. We saw it in the IBB. We saw it in the transportations. I mean, we saw it everywhere. I mean, it's just an amazing. It's not a coincidence. There's no question about that. It's just, if we go below that's going to tell us the story that we really want to know.
Absolutely. Well, thank you again for all your work, Larry.
Yes.
I really appreciate it.
Yeah, thanks for calling in, Paul, and I appreciate the kind words, and I'll get that $20 in the mail to you just as soon as I can, okay?
I'll be looking for it.
Okay.
Bye-bye.
Now we're going to go on and take a look at, since we're looking at harmony and stuff in the markets, we're going to take a look here at the Dow Jones Utilities, because that has been the leader since the end of the year. It had been the lagger by quite some time, but we hit something really amazing now in the Dow Jones Transportation. And we'll see that we made a 61% retracement off the high in January, Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
looking good, Billy Ray, feeling good, folks. And if you're looking good and feeling good, you must be lucky. And today we are lucky. We have our good friend Priceline Charlie on from La Paz, Mexico. Charlie, are you there?
Yes, I am. Good morning, Larry.
Good morning to you. What do you have for us today, my friend?
Well, I did some covering on Friday. I saw that Priceline on the weekly went to the 200-day, and I figured I'd take a little bit of profit. But now I'm wondering if I did the right thing, so I decided to call you.
Well, I think you did exactly the right thing. And you know what I would do right now if I were you, Charlie? I would stand aside for the rest of this week because I think we're going to be a little choppy. I still think we have a little bit of an upward bias here, but I would wait a little bit. If you got a rally of about, upper end of the 1140 area, up about, $80 from where it is right now, then I'd say yes. That would be something that you could possibly look at. But right now, you had a really nice run down, so I would just stand aside. I did want to ask you a question. I know it's the beginning of the year and there might not be a lot of business going on, but how was the secondary construction equipment market looking down in Mexico? And well, here in the U.S., because I know you do all your buying up here. What does that look like?
In the U.S., the prices of equipment have dropped dramatically. Heavy equipment like excavators that normally would sell for $200,000, just recently in an auction was selling for $25,000. It was incredible. There's no demand.
Wow.
In the
That's
Mexican
truly
side,
amazing.
it is. On the Mexican side, the peso used to be at 12, 13 to a dollar. It's now 18 to a dollar. The Mexicans cannot afford it.
Yes.
So the only way I'm doing business right now is I buy the equipment, I just rent it to them as they need it.
Wow.
But
Well, that's interesting. Do you make enough on your rental to cover your? Well, you would, otherwise you wouldn't be doing it. So it must be profitable anyway.
Yeah, I'm buying it in cheap dollars. To me, it's cheap when you're buying at the price that I'm buying, and I'm able to actually recover my investment in less than a year.
Oh, that's fabulous. But anyway,
Yeah,
if you would try to stay, don't do anything this week with Priceline. If you got a rally up at that 1140, then I'd say yes, that would be a good place to take a nibble at it again from the long side. But you had a really nice run from January till Friday, and so I would say just stand aside for a little bit.
I felt that way too, especially where when you make as much money as just and it's a giveaway. If you get greedy, they'll get you again, and there's always a reason why they're going to bounce it. So, and you think 1140 is what we're looking at roughly?
Yes, that would be back into that resistance zone that we had. In fact, that's just a little bit below the low we made in August, on August the 24th. So that's what I would be looking at. But I'm long term. I'm extremely bearish just looking at these charts. I don't know too much about the economics implication of it, but that's what it looks like to me.
Okay.
I hope that helps, my friend. And listen, keep calling in because we love to hear from you.
Okay, very good. Thank you very much for the help.
You bet.
Bye.
Thank you. Okay, that was Priceline Charlie from La Paz, Mexico. Now, one of the next things that we wanted to talk about, since we were talking a little bit about the Ammonite at the beginning of the show and the jewelry show that's here. The jewelry show lasts for 2 weeks, and it started Saturday and Sunday, and we had the weekend was fabulous weather here. We were 80 degrees. And one of the jewelry dealers happens to be a very good personal friend of the family, and so he stays with us here in Tucson. And when he came home last night, he had told us that it was the worst day he had ever had in the 25 years he's been doing this show. So I don't know why it would have been so bad on a Sunday, but it was very, very slow, he said. And last night we had a huge desert storm here last night with winds of about 40 mile an hour and heavy rain, but that's all blown out of the area now, so it should be okay. But I'll keep you updated on weather. But this is really important because this is, jewelry is something, it is a discretionary income, and if these dealers are coming in and not buying a lot, that tells you that business, is slowing down quite a bit. Now, I had a question about a chart that I posted last week from the Federal Reserve. This is a chart that basically shows, where the loans are coming from. And as you can see from the top left-hand side, you can see what's happened to student loans in the last 7 or 8 years. And then if you look at the far side, you can see what the Federal Reserve debt is by them, going into the Treasury bond market and pumping money into the system. And you see that in the chart on the second column. The first column, second one down, where it says money printing, that pretty much, shows you, what you're looking at. So you want to be really careful. We live in a time where we have the old Chinese curse, may you live in interesting times. So you want to be able to see what's going on with this. But we should be rallying into the new moon of next week, a week from today, which is the year of the monkey, and in Chinese culture. So we'll see how that works out. However, let's get back to the foreign currency markets. The Canadian dollar has been very, very weak, and it's actually increased a little bit over the last 5 or 6 days as crude oil's backed off. So there's a tremendous correlation between the crude oil and the Canadian dollar, and the Canadian dollar is telling us that crude oil has farther to go. And the reason for that is they should be going in sync, and they're not. So that's telling us that something is a little bit different in this time. Now, we've got another market that really needs our attention, and that is the gold market, because we're getting right back up to that 1128 area. That's the area that we hit last on the 27th. We backed off about $17. We came back, and we're acting relatively strong today. They pushed gold down $5 or $6 right after the stock started to do their pre-market thing, and gold came right back and made new highs. We're only at $2 away from those old highs, and breaking out of that takes us up into that 1130. If we close above 1130 in the gold, then that would tell us that we're most probably, getting ready to have a, much stronger move to the upside, which is good. However, the silver market is still, lagging very, very badly. If silver were moving, I would say just get in and buy more gold, but the silver is still acting, relatively badly. It can hardly get out of its own way, trading at 14.32 an ounce, and the high we made the other day was 14.55. So it's 25 cents an ounce lower than where gold was at the same time. So there's not a follow through there, and these markets go up together most of the time. So my assumption is that you got to wait for this gold to prove itself to you, but we'll let the gold do that, and we'll see what's happening. As far as the U.S. dollar, I heard John Logan's interesting talk about his support points in the euro. We'll get back and we'll talk about the euro right after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time.
Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're taking a look at the euro. As you can see here, we're in a decided downtrend, and if you notice that 135 pattern that we look at occasionally has formed in the euro, and it certainly looks like we want to go lower. We're having little rallies each day, of course, but each rally is followed by another move down, but that's much we're looking at. Now, I've had a request to talk a little bit about the S&P 500, and we will do that right now. This is what we're looking at here. This is the E-mini S&P 500 going over the past 5.5 months. As you can see, we did take out the lows of August the 24th, very in the middle of the night, actually, at 1804. And then the market had a pretty good rally. And as you can see, we rallied 125 points off the bottom in a matter of 7 trading days. And if we were to continue this rally for another 7 trading days into the new moon, that could take us all the way up, to these higher levels of 1993, and it has the potential of also making 2044. 2044 would really be a huge rally. That's 100 points, another 125 points from where we are right now, and that's certainly possible because if you did it once, you can do it again, and that's nothing more than an equal rally from what we had from September 28th into November 2nd. And then the move down, and then the move up. And believe me, with the year of the monkey coming in, the monkeys are slippery. So you've got to be able to say that, maybe something like this will be a little tricky. But anyway, this is what we're potentially looking at here. Now, if we go below 1852, down 80 points from where we are now in the S&P, then all bets are off. But right now, this thing has a bullish bias. And frankly, as I mentioned before, I have not seen that many ratios at 1.618 in all of these different indices. It's just amazing. And I recommend you do listen to the words of Jim Twentyman. Defy human nature. Do the work yourself. Go in and look at these and see how they line up, because it's truly amazing. I'll show you one here that was absolutely spot on to the exact tick, and that's the Russell Small Cap. And as you can see, that was supposed to, have a January rally, but in fact, maybe it started on the 20th of January. I don't know, but right now this market has legs, as Tom O'Brien would say, and I think we're going to have a little bit more of a rally, at least into February at least into February 8th. That's what I would be suggesting, is to watch that. But overall, long term, it's very, very bearish. Now, what I'm going to do tomorrow, we're going to have Stan Harley on. He's an old friend back in the Conti commodity days. He's a cycle expert. On Wednesday, we will have Rich Anderson on. On Thursday, we're going to have Norm Winsky on. He has some really important cycle stuff to go over with us. And then on Friday, we're going to have Adrienne Telgaray from Trading on Target, and she's the premier psychologist out there. So I think it'd be a great show to listen in, and she'll answer any questions about what it takes to be an active trader, or not active trader, but a professional trader, where you can try to take money out of the market each time. And that's basically what we're looking at so far in the S&P. Based on what's happened last night, all we've done is we've made a 38% retracement of that intermediate low the other day. We came down 20 some points, 22 points from the high, which is about normal. And if it's any good, the S&P shouldn't get much below 1913 today. And the fact that it's selling off, none of these markets go straight up, and some of them go straight down, but that's just the nature of markets. So just try to look what the swings are doing. But longer term, the big pattern in the stock market is incredibly bearish. I mean, January has already told you, and the worst thing they can do now is confuse you with a good rally here. And it's not going to confuse us, I don't think. Well, I hate to say that, but we'll do our best to try to not get trapped into it. But that's what it looks like to me, is that we're in the midst of a nice bear market rally, taking us back into some pretty significant resistance zones. We've got some cycle work that tells us that we're coming up into that. So you have to go to the dance with the girl you took and see how long you can keep up with the music. That's basically how it looks. But boy, we sure hit a lot of 1.618 numbers in late January on these numbers. These are huge. Like I mentioned before, I have not seen that many expansion numbers since 2009, and that goes back a long way, and that was a major bottom. And maybe this is a really, really major bottom. Maybe the market's going to turn here and go higher. Maybe that's possible. I don't know, but the way January started out, it certainly doesn't look like that. Someone asked a question about the quantitative easing. If you want to ask about quantitative easing, folks, we have a good historical precedent. Look at Japan. They've been doing quantitative easing for 20 years. You know what I mean? 20 years, and it hasn't worked. It hasn't worked here either. So why do they expect anything different? Japan is trying to stave off deflation, and it's just not working. So that's the bottom line of what we're watching here. So keep in mind that that's what we're looking at right now. But we hit some major spots here in the emerging markets, and also in everywhere. I mean, they were just everywhere. I'll just put the emergency market up one, and you'll be able to see this long-term pattern, how bearish it is. But we just came off of a major 1.618 expansion from the August low. There was a butterfly pattern there, and it's had a tremendous rally already. It's already rallied it's already rallied 10%, off the bottom. So that's telling you that something significant happened. So until we go back below that, we're in the midst of a continuing rally. That's the way it looks like from my point. A question about the grains. We had a little bit of a rally in the grains towards the end of last week. I still think we're going to be able to find a good pattern to get in on that, but I don't see anything yet. It was just we had about a 10-cent rally in corn, and a 12-cent rally in wheat, and a 20-cent rally in beans, but that's not very much. And I think we're going to continue to watch, because we are going to have some reports coming out on planning intentions and stuff that will be coming around very, very shortly. Now, I wanted to mention here, we've got a break coming up here, and we got to get on with the show, is the Treasury bond market on the weekly basis, because we are at a major resistance up here today at that 162 level. We've already broken the handle down to 160 and change already. But if we can get above 162, we got a chance at 172 in the long-term bond weekly, and that would really be an interesting one if we do that, because it will tell us that most probably Tom is going to try to force me to get on that boat. But they changed the specification on this contract, so at 161, that's really it's about a 5-point handle switch from the other. So we'll see if that's going to be the case. But we'll wait and see whether that happens or not. The gold is very, very close now to breaking out to the upside. There's a real possibility here that we could get moving pretty good here in the gold market, and that's one thing that I would be watching very, very closely. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We're going to wrap up the show here. We've got the market being under some pressure early this morning after our 400-point move up in the Dow. Remember a few months back, we were saying that we were going to see 500-point moves in the Dow, and these will be expanded to 800 points farther down the road when the volatility starts getting really crazy, like we're going to be expecting in April and May, because May is where we're thinking there's going to be a pretty significant bottom. But right now we're in midst of what we think is a rally here, and we'll have to wait and see, what's going on with what's happening at this particular point. The fact that the market, the opening part of the day, folks, is incredibly important. But what you want to do is you want to wait till that first hour has completed, and that gives you a pretty good idea of what the trend is going to be for most of the day. This is particularly true if you're trading foreign exchange. That's a very important spot to look at, which is 8 to 9 London time, which is 1 to 2 New York time. So those are really key levels to look at. Regarding the bonds, the bonds have a lot of resistance at 162, folks. Just a great deal of resistance. Now, the Treasury notes, they have taken out some of those important spots. So notes have increased, or dropped in yield versus the bond. So that's a situation also that's telling us that the economy is not doing nearly as well as we look at. But we start the day here. Before we come in with the next speaker, which I believe is our leader, Tom O'Brien, we got the Dow down 140, the S&P's down about 12, NASDAQ's down 17. We got gold up a little bit, but still hasn't broken out. Gold needs to close above 1130 to be a breakout, and frankly, looking at silver, it just doesn't look that way at all to me. I wanted to show one other pattern here that someone's asked about, and that is the biotech section. And if you look at this biotech over the last year, you can see we had the head and shoulders pattern and the big ABCD complete last Thursday. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.